Despite slow economic growth gripping the global marketplace, the luxury goods sector continues to thrive. Here to share insight on the economic signals driving this growth, Dr. Pippa Malmgren. Now, in your book, you talk about how signals are the way to determine what the world is going to do today and tomorrow. So tell me a little bit about what signals we should be focusing on when it comes to the health of the EU's economy.
Well, there's so many different conflicting signals. So, for example, in the United Kingdom, there are lots of signals like luxury goods sales are up. West End theater tickets are up 300 to 400% year on year. That's a pretty good signal that we're starting to get some inflationary impulses occurring, even though the official data doesn't reflect that today. You kind of expect higher prices. We have exactly the opposite in Greece, where prices just keep falling and there almost is no base. And the market is struggling with, well, what happens once it's clear that it's not only that they can't make the payments on the debt, they can't run the nation, that it's literally become a failed state. It's a much bigger problem than merely a debt problem.
Let's talk a little bit about this concept that luxury buyers, people in that sort of top tier market, are insulated from the economy. What's to say that what's really fueling their purchasing power is not bank loans, and that in fact what we're looking at is a credit crisis on the horizon?
Well, first of all, I think they wouldn't feel that they're immune at all. I think most people who are asset owners...
But economists describe them sometimes as being insulated
Absolutely.
from the market forces.
Well, are you really insulated if you feel that your wealth has come from an artificial cause, which is quantitative easing? So you're worried, what happens when interest rates starts to go up? How quickly will it disappear? How fast will the stock market fall, is one view. But a second issue is governments are coming after the wealthy with much higher tax demands in all kinds of obvious and surreptitious ways. So in that sense, they don't feel immune either. And this is interesting in the luxury goods space because one of the things it does, and a signal I think is important, is it starts to move the logos from outside a luxury good to the inside, because people don't want to be seen to be flaunting that wealth in a world where the divide between the asset owners and the people who don't own any is so big.
If you want to talk about marketing, very much focused on that Asian shopper who has a taste for the Mulberries, the Burberrys of the world, right? So for them, what are the signals that you're focusing on when it comes to this single-digit growth that China is facing in the decade ahead?
Well, my advice to the luxury goods firms that I've dealt with in the last 2 years has been stop focusing on China as your principal customer. With the crackdown on corruption and the slowing of the economy, you're simply not going to be selling as many goods to them. And instead, focus on that audience in London, in Paris, because they will go abroad and they're buying properties abroad and they will put their luxury goods there. But the best market has turned out to be the United States, and especially places like Texas, where the demand for luxury goods is off the charts. But nobody was focused on selling luxury goods to Texans because they all thought it was going to be the Chinese.
But is there a comparable marketplace in terms of the proportion of intake in China versus Texas, the States, and the other profitable parts of the U.S.?
Well, this is a key point that was revealed by the protests in Hong Kong, when everybody realized that such a huge percentage, and I can't remember the exact number, but it was like 40% of all luxury goods sales occur through Hong Kong as a kind of waypoint. And it's not that that has to be true, it's that luxury goods have positioned themselves for that to be the principal sales point. And suddenly the lack of diversity was revealed by that event. And I think now you're going to see luxury goods companies presenting themselves to a wider audience in more diverse locations. So this idea that it's Hong Kong that drives the sales is not right. It was the strategy to put it in Hong Kong, and the sales were there at a particular time in history.